Okay, what is going on, CYPRX advanced YouTubers? Welcome back to the CYPRX YouTube page. As always, if you're interested in learning about cryptocurrencies, commodities, indices, foreign exchange, please go ahead and consider subscribing to the YouTube channel. Guys and gals, please make sure that you are subscribing, unsubscribing, resubscribing back to the YouTube channel. We are shadow banned here, and it does help the channel grow. Throws off the YouTube algorithm. Really do appreciate the love and the support. In today's video breakdown, we are going to cover a leveraged XRP buy position that I was in this morning during New York session. However, pay attention to the price action analysis that I give you all. The key words that I use is why I was taking profit, okay, showing you all that I was taking profit from that area because the price action on XRP could possibly reverse. Now you look at where price action on XRP is at now, we have reversed all the way down below 33 cents. So again, giving you guys logic in the market, showing you how I was able to take a proper buy position on XRP on my leveraged account, how that went into profit, why I moved my stops to break even, why I was taking partials from those certain target levels, and what could have potentially happened to XRP throughout the remainder of the day. Blessings to you guys all. Make sure that you're smashing that like button on the way out. Without further ado, let's jump into today's video breakdown. Good morning, ladies and gentlemen. Thank you all for tuning in. I told you all on Twitter, as well as in the CYPRX private group chat, that I was going to do a little Zoom call breakdown on a leverage trade on XRP that I had mentioned to the students that I was going to be looking at. I think I started telling the students that I was going to be paying attention to XRP price action on Saturday morning. If I'm not mistaken, Tony's nodding his head. He was in the Bitcoin XRP group chat. Me and him are looking at the same exact trade right now. I mean, CYPRX confluences to the T. If you're patient, you can analyze price action with an emotionless environment, which I'm going to cover today. It's very simplistic to execute trades. So one of the main things that I attempt to teach the students here at CYPRX is how to create an emotionless environment. Okay. And the only way to do that in the market is by giving yourself a logical edge based off of a certain set of confluences that are more likely to play out in your favor. Okay, when you're trading these markets, and you take it with a logical approach with zero emotions attached to your trading, most likely you're going to come out on top in comparison to somebody that is an emotional based trader or somebody that trades with their natural human inclinations to have fear and greed and uncertainty and doubt running through their mind on a day-to-day basis, right? As human beings, we're naturally inclined to have all of those emotions attached to our being when we come into these markets. But as traders, we have to understand that the market doesn't care about any of that stuff. The market does three things on a day-to-day basis. It goes up, it goes down, and it goes sideways, okay? Just like if someone were to drown in the ocean, and I use this analysis all the time, if someone were to drown in the ocean, it's not the ocean's fault. The ocean moves frontwards, backwards, and sideways. It doesn't know that you're jumping into the ocean, and it didn't drown you on purpose, right? It was your choice to jump into the ocean. And obviously, of course, you know, the result was you drowning. It's the same thing in the market. You can drown yourself in this market by not understanding and respecting the natural movements of the market. Okay. So the CYPRX strategy is designed to teach you the natural movements of the market and to generate a higher probability for a trade to go in your favor. Now, that's not guaranteed, obviously, because we operate in an environment of uncertainty, but I'd say for the most part, right, about 70 to 80 to 90% of the time, the trades go in our favor based off of this certain set of confluences that we pay attention to. So some of the things I'm just going to cover, and then at the end of the Zoom call, I'm just going to go over some interesting fundamentals. You guys know that I like to read an article in the morning and an article in the evening, just to kind of give myself a fundamental wrap up, see if I can come by any gems and fundamentals. So I found 1, 2, 3, 4, 5, 6, let's say 6 articles that I'm going to kind of go over at the end of the Zoom call breakdown. But I want to cover real fast just some simple confluences that I utilized, not all of the confluences that I utilized in this trade, but we're going to talk about bank interest and buying from previous areas, specific session times. So obviously you guys know that I'm a New York session trader, or at least people that watch this YouTube channel or are involved with CYPRX, you guys know that I like to trade New York session. Now there's a reason behind that, right? I'm operated here in California. So for me, New York session time is 5 a.m. Pacific Standard Time. That's perfect for me to wake up, start my day early, bright, with a cup of coffee. I wake up at about 4:30 in the morning. I monitor the charts. By 5:30 a.m., I'm executing trades, and I like to get in and out of the market as fast and as swiftly as possible before Asia session starts. Okay, so that's about 2 p.m. to 3 p.m. here in California. I like to get in and out of the markets, right? So I would classify myself as a scalper intraday trader. That's what we teach here at CYPRX. That's what the majority of us here at CYPRX are. And anybody that watches this video breakdown at a later date, you need to understand and determine what type of trader you are, or the market's never going to work for you. If you're constantly trying to do something in the market and it's not consistent, you're going to find a lack of consistency in your trading as well. Okay. And we're going to cover psychological level reactions, and we're going to talk about pattern identification. Okay. And then last but not least, I just have this little side note: creating an emotionless environment with a higher probability for a trade to go in your favor, right? That's the goal as all of us as traders. Okay. You know, even if you don't want to admit that you're here for money, everybody in this market is here for money. Why? Because you can ask the question, if there was no monetary gain by trading these markets, would you stay involved in these markets? And 90% of people would answer no. You wouldn't trade these markets if there was no ability to make any type of monetary gain. So with that being said, everybody's here for one purpose and one purpose only, and that's to make money. Okay, free yourself from the system. So I just want to take your attention all the way back to the May low right here in this general vicinity. We're going to hit the replay button, and I'm going to show you guys how I was able to identify this area of interest where I thought that the banking institutions could possibly take buy positions from if we do not break these levels, which was around 33 to 34 cents. So let's hit the replay tool real fast, and we'll go all the way back to this area. Okay. Now I'm not going to go into detail on the time frame that I like to monitor this area, because that's for the CYPRX students. But I'm just going to kind of show you guys what session I was looking at for this area of interest. Okay. So I'm going to jump down now to the 5-minute chart. Okay. The 5-minute chart is not specifically what we utilize here at CYPRX to identify our areas of interest, but for this example, I'm going to utilize the 5-minute chart. We're going to scroll all the way to the left-hand side. All right, cool. So here in this area, all right, this is the May 11th low, and we can see how the banking institutions during Asia session, we already know that Asia session, or at least if you've been watching this channel or you're on CYPRX, we know that the daily candlestick opens in this general vicinity, okay? Right before Asia session, I'd say about an hour before Asia session, this is where the market resets itself and the new daily candlestick starts to form. Where we can kind of see here the same exact pattern that I'm going to cover in the trade breakdown today happened in this area, okay? Or we see liquidity from the previous day beneath this low, okay? So here's where the daily candlestick opened. So we know that the previous day set up a liquidity trap right here, okay? We know that the market makers need to grab some type of liquidity before they take price higher. So what do we see Asia session do? Asia session comes and hunts, manipulates price action, and hunts the liquidity from the previous day. After they tap into this area of liquidity, okay, we then create a bullish, let's just call this a bullish institutional pattern, okay, where we can see the market makers react from a psychological level, okay? So this is where we're going to start to cover psychological levels. We know that we're trading XRP US dollar. So what does that mean? That means that we're looking at the 00s, the 25s, the 50s, and the 75s, okay? So we can see here, right in this general vicinity, if you want to just round this off, we'll go to coordinates, and we'll type in 800. So 800. Okay, so we can see that the numbers are rounded off to the core theory, and we reject that psychological level. Okay, now this is an institutional pattern that I teach you all on YouTube and in the CYPRX content, where we can see a previous area of liquidity, a rejection of a psychological level that leads with the bullish match of momentum from a previous bearish momentum. Okay, so this is that U shape that we look for on CYPRX. And then we see the market makers pull back to that area to retest it and never break the previous structure low that was created at the psychological level. So we can now identify this as a grab of liquidity and a change from weak hands to smart hands. Now the banking institutions are more interested in buying price action, and you can see how we never revisited that psychological level, okay? And the market started to trail up, right? So this was May's area of interest. So I took this area of interest and I highlighted that and I dragged that all the way over to the right-hand side. And I said to myself, okay, now let's get out of the replay mode. Okay, so this is that blue line, extending that all the way over to the right-hand side of price action where we're currently operating at right now. Okay, so higher time frame analysis, we can see that May lows, right, all the way back in May, how Asia session, look at the price action. Here's Asia session, and we saw how previous on May 11th, Asia session did the same exact thing, guys and gals, okay? Remember, What we're looking for in the market is a pattern that plays out. We know that banking institutions are the only people that have the amount of money to do this type of price action. Okay, what do I mean by this type of price action? Well, remember from the exact previous breakdown that I just gave you, here's the daily candlestick open. Okay, here's previous daily lows. All right, and what do we see? Asia session did what? They manipulated price to come and attack that previous day's worth of liquidity here in this area, all beneath these lows. Okay, so then they hunted that area of liquidity, right? We have a psychological level. We can, identify this as whatever psych level makes you comfortable. What we're looking for is just a psych level. Okay, a lot of people will ask me, oh, how do you get your psych levels? Realistically speaking, I just round them off to the most average psych level for wherever price rejected. So for here, we'll look at this as the 34050 level. Okay, so check this out, and I'll just round that off, right? So we can clearly see how the banking institutions rejected the psych level. You could probably even put this down to the 340, maybe 25. Let's see. Okay, you could even maybe probably just put this at the 34-cent psych level. Okay, boom. So the 34 psych level to the T, but as long as you're rounding them off and seeing that XRP USD trades off the quarter theory, that's all that matters. Okay, the psychological level is just your understanding that the banking institutions aren't trading off of support and resistance. Okay, institutional traders and whales, they do not see support and resistance in the market. They see discounted prices. And you can see from this blue area of interest that we dragged over all the way from the left-hand side, this is a discounted level from where Asia session, look at the similarities, okay? Here's Asia session, and we know that this blue line that we dragged all the way over from the left-hand side is where previous Asia sessions bought from, right? And they did the same exact thing. So they manipulated price to the downside to give themselves discount. We can clearly see that Asia session got past price action at a high. How can we determine this? Well, we can see the daily candlestick open took a little buy position. We know that banking institutions are not going to buy from a high. Okay, this is a high in price action. How? How is this a high? Because it's clearly not a low. This is a low, this is a high. Okay, so the banking institutions are not dummies. They're not going to buy from a high. So what do? They sell off, right, and they tap into the area where they bought from all the way back in May 11th, and then they create that same institutional pattern. Okay, where we see the market makers retest the area of interest, they break market structure. So here's the pattern right here. We see the liquidity, we see the liquidity grab, we see a retest to confirm that buyers are now in control of the market, and it leads to a market break in structure. So now here's the institutional pattern, okay? This is exactly what I teach you guys to identify. Previous area of liquidity, liquidity sweep, a higher low after the liquidity grab that leads to a market break in previous structure. Okay, so now we know that with this institutional pattern as retail traders, we're more likely inclined to catch a trade over to the right-hand side somewhere. We don't know where that's going to be, right? But that's where our Fibonacci tool comes into play, where we can measure from the low after the grab of liquidity to the market break and structure high, and try and formulate an area of interest where price is going to retrace down into discount. Now we know from what I've taught you guys that the banking institutions are going to likely attack an area of discount of anywhere between 62% and below. Sometimes they even push price down into 100% discount, which for this case, they did exactly just that. Okay, so I took my Fibonacci from the higher low, which was right here after the grab of liquidity. You guys can see here how this little tiny wick, I will zoom in. Okay, this little tiny wick was the grab of liquidity. This was the higher low after the grab of liquidity. So I took my fib from the low to the high that broke previous market structure, which is this London session high right here. And a lot of people will ask me, how do you know which high to take your fib from? Well, I just utilize the 25% retracement. So I just kind of have an eye for this, but once price retraces at least 25%, so that's halfway to the 50%, that's when I know price is properly retracing. So right about here, okay, when price action was here, okay, that is about a 25% retracement. Okay, you can see here's the 50% right here. So you can imagine that in between the 0 and the 50, halfway of that is about 25%. Okay, so that's where you can confirm that this is going to be most likely a pullback, right? So I took my fib from the low to the high, and after that, literally all I had to do was wait. So where price action was at right here, Okay, you guys can see down at the bottom of my charts, this is really late California time. So this is about 1:30 in the morning California time. So I set my alarms down here. I set an alarm at like 34 and a half or maybe 34 and a quarter of a cent. I set my alarm down here at like 34 and a half cents. Why? Because I was trying to target to enter in at discount. So my original entry criteria, I was looking for an entry up here. But when I opened up the charts this morning to come into New York session, I was like, dang, okay, I missed most of my alarms and price action was like down here. So I was like, okay, if we can hold this blue area of interest, remember, okay, we still have this blue area of interest, logically speaking, that we would need to break to confirm any type of bearish sentiment. And you can clearly see that this institutional pattern right here took place, which again is giving us a higher probability for a trade to go in our favor if we cannot print bearish order flow beneath this pattern. Okay, what do I mean by that? Logically speaking, as long as we do not create lower lows and lower highs beneath this institutional pattern, then most likely we are going to get a bullish continuation. Okay, and that was my logic coming into this trade. So now simply all I did was I waited, again, having patience in the market and having complete control over my emotions. You can see now price action gets passed over to New York session. All right. So again, same thing that I covered when I talked to you guys about how banking institutions are not going to buy from a high. What do you notice about price action when New York session got past price action? So here's New York session open. Where's price action operating at when New York session got it? Can somebody tell me?
It's operating from a high.
It's operating at a high, right? So as traders, we are not going to chase the market right now. We're not going to start putting in buy positions. This is where that whole ideology behind FOMO and traders that don't have an intuition to control their emotions comes into play. So what do the banks and institutions know about retail traders? They know that retail traders are going to start dumping in over leveraged buy positions all in this area, which is why I teach the CYPRX students about the manipulation window, because we know as CYPRX traders, right, that we are now operating in a manipulation window where the majority of traders get stopped out of the market because this is where AI, artificial intelligence, has complete control over the market. Okay, why? Logically, okay? I can't just say this stuff to you guys and not back up reasoning behind that. Okay, let's think about being a New York session trader, a trader that actually works at a trading floor in New York, right? Most likely at 6 a.m., you're waking up, you're putting on your pants, you're brushing your teeth, you're getting ready for work. By 7 a.m., you're driving to work. By 7:30, 8 a.m., right, you're getting to work, okay? Turning on your computers, getting in your chair, getting your seat, getting your headset ready to start making phone calls and stuff like that, right? And then by 8:30 a.m., okay, that is when bank and institutional traders are finally starting to place institutional orders for the day, okay? And so here in California, that correlates from 3 a.m. to 5:30 a.m. in the morning. So this is, again, a window of opportunity for you to avoid in the market. Now, this does not happen every single day. There are some days where the trade actually takes place in the manipulation window, okay? But the majority of the time, the trade does not take place in the manipulation window and uses this area to build liquidity before the session, okay? So here we have an area of liquidity of lows and an area of liquidity of highs, where the bank and institutions are going to utilize that as a catalyst to grab that liquidity and then build that liquidity to take price either higher or lower, okay? Which is exactly what they did today, okay? So again, when I give you guys this manipulation window, it is just an area of interest to say to yourself as a trader, it's best for me to sit on my hands and wait to see how price reacts to this area, because I know that retail traders are chasing this type of price action. I also know that the bank and institutions do not buy from highs, okay? So check this out. Knowing all that information, we have an area of interest from a previous day, May 11th, where we knew that bank and institutions during Asia bought from. We also see that same institutional pattern during today's Asia price action. We see psychological level rejections. We have pattern identification, and we also have the ideology behind, if we want to move in tandem with the banks, we need to wait patiently to give ourselves the best risk to reward ratio, which would be buying anywhere between 62% to 79% to 100% discount, okay? And we also know that the banking institutions are most likely not going to buy from a high. They're going to manipulate price action down to lows to then take buys after they've done that and cleared out the liquidity from the manipulation window. So watch how this all plays out. We see the market makers open the market at 8:30 a.m. and boom, what do? They immediately manipulate price to come and grab those lows. Okay, and then boom, they inject money straight into the market from where what? Asia session bought from on May 11th. It's so fluent. It's so fluent when you trade this way. I can't even I'm at the point in my trading career where I can keep explaining this stuff to people, but until you actually see it and you watch it live in the market play out right before your eyes. I know Tony was looking at the charts this morning. I didn't check the rest of the Bitcoin XRP chat, but I'm sure other individuals were looking at this as well. Probably Emiliano, right? It's so simplistic and easy to trade this way. And like I said, it takes the emotional edge out of your trading, because what you're doing at this point is you're completely trading in tandem with logic in the market. You're not trading with emotions, okay? And that, again, is what 90% of people are doing. They have no directional bias. They're guessing the market movements, and they're trading without an edge in the market. Okay, so this is how I caught this trade. I think I entered at 34100 to be exact. So let me just take this down. 34. I entered right there. Let me round this off so you guys can actually see my entry. And I'll take you down to the 1 minute and I'll show you why I entered there. So we're on the 5 minute right now. Let's go down to the 1 minute. All right, so if we look at the 1 minute, I just want to show you guys the candlesticks that allowed me to enter into the trade. All right, so we have this kind of I don't know what they call, retail traders call this candlestick, but this candlestick to me means that price action cannot go any lower, right? It's like a hammer or an inverted hammer, okay? And then boom, immediately following it, we see that U shape. So we see a bearish candlestick. We see two bullish candlesticks match the bearish candlestick momentum. And then when this candlestick started to print bullish, I pieced together all those confluences. I had the confidence to enter into a trade, look at my risk to reward ratio. I was like, okay, as a trader, I'm willing to take this small amount of risk. I think I risked 2% on this trade, okay? On my leveraged Osprey FX account, I risked 2% on this trade. So I was willing to risk this small amount to gain. Okay, logically speaking, my original targets were operating above these highs. Okay, so you guys can see my logic behind the trade. So not only did I have a good risk to reward, but I also had logic behind my target areas, which was the manipulation highs. Okay, and when you can piece all that stuff together, you gain an unprecedented amount of confidence in your trading. So when you have logic, not only in your entry, but logic behind your profit targets, okay? And here at CYPRX, that is all we target is logic in the market. Well, we know that if the banking institutions are going to take buys from these lows after liquidating previous lows, then what are they going to do? We know that banking institutions target liquidity. So if we know that New York session was building liquidity in the manipulation window all above these highs, where are they going to target? They're going to target the highs. And that just solidifies the trade right there. So I took profit as soon as we violated these highs. Again, logic behind our profit taking. Why are we taking profit once the market violates highs? Because we operate in an area of uncertainty or an environment of uncertainty. We're taking profit from these highs. Why? Because we don't know if the banks and institutions are going to now reverse price action. Okay? We don't know. We don't know if the market's going to continue higher or if it's going to reverse after grabbing liquidity. All we know is that banking institutions like to move based off of where liquidity lies in the market, okay? So now my stops are at break even. I took 80% off this trade, 20% is currently floating, and I'm looking to see if we can get a Fibonacci extension of at least 70%, which would have been a risk to reward ratio of 1:8 for me, okay? And the logic behind that is to come and clear out those Asia session highs over here to the left-hand side, okay? So again, the reason why I'm holding this trade has logic, because that would push the market above the Asia session highs. If we don't get that, then what most likely is going to happen? The banking institutions are going to continue this sell-off rally that we've been having for the past couple of days on XRP, and we're going to see lower price action, okay? Very simplistic and easy to understand. I hope that I didn't confuse anybody. CYPRX strategy to the T. There were a couple of other confluences that I didn't mention that the CYPRX traders can kind of see on my screen via the EMAs. We also have the point of control in this general vicinity that we could have utilized, right? So like I said, CYPRX strategy to the T, things that I've been teaching you guys on YouTube, things that I teach you guys in the CYPRX course content. And when I take all of the drawings away, look how confusing this becomes, okay? When I take the clarity away, starting from the beginning, the area of interest that we had drawn on, which solidified the majority of this trade from May 11th, Asia session. You guys saw how I went back in time and broke that down for you guys. How in this area, bank and institutions during that previous Asia session did the same exact thing. Well, how would you have been able to notice that if you, number one, didn't know that it exists, and number two, you had too big of an ego to say to yourself, okay, hindsight testing is what's going to be one of the things that makes me successful in this market, which I've gotten thousands of comments on YouTube that say, oh, all you do is hindsight test. All you do is go back and talk about past price action. Well, you can see how doing that solidified one of the confluences that gave me the confidence to take this trade. So people that say that clearly don't know what they're doing in this market, okay? So on top of that, being able to identify an institutional price pattern right here, okay, where we can see the market grab liquidity from a low, create a higher low, and then break market structure. This is an institutional pattern. And without knowing that this is an institutional pattern, without any drawings on the chart, how can you identify that? It just looks like rubbish, right? Without knowing the manipulation window, you wouldn't have known that this was a buy trap, okay? Without understanding that the bank and institutions do not buy from a high, you would have been doing what? Chasing price action like the rest of the retail herd, right? Without understanding that the bank and institutions will most likely push price into discount, you would have most likely tried to buy here or buy here, right? All of these things that I teach you guys, again, is to solidify giving yourself an edge in the market. And that is why here at CYPRX, we are creating consistently profitable and superior traders time and time again. It is just a matter of time before all the students in CYPRX become profitable fully and start to really utilize this strategy, trading on $100,000, $200,000, $300,000 prop firm account that can completely make 2 to 5% per month, which is above a minimum wage salary. That is our goal here at CYPRX, is to take people with no knowledge in this market and show them how they can create a lifestyle for themselves, making 1 to 5% per month, being comfortable with that, with a strategy that shows consistency in this market. Nothing that we teach here is guaranteed, but what we teach here is what the markets have been doing for years, manipulating people, buying from previous discounted areas where bank and institutions buy from, understanding AI in the market, understanding how to avoid that by trading specific session times, utilizing specific confluences, and piecing all of those things together to give ourselves, again, an emotionless environment in the market. So that is my spiel for today's technical analysis breakdown. All right.